Hello everyone, welcome back to the channel. If you are new to the channel here, this is basically a series where I have tracked my finances since I turned 18 years old in May of 2012, and here we are 13 years and 2 months later in July of 2025. So if you want to see this journey, feel free to go back and watch those videos or check out the end of year net worth recap videos just to get a quick update on everything. But we have made significant progress in the past 13 years, and so we'll go ahead and jump right into it. So for the month of July, made just under 14,000, just about like every other month in 2025. This should continue through 2025, except for November. I'll get paid 3 times, just like I did in May. I should also start taking home a little bit more money. I'm about to max out I believe it's Social Security tax, which is like 6 something percent. So once you cross 170 some thousand in gross income for the year, you basically max out the Social Security tax that is put on you. So that should happen here, I believe, next paycheck, which will bump up my monthly take home by about $800. Nothing else really changed, so feel free to pause the video if you want to see how much I paid in taxes, 401k, HSA accounts, insurance, things like that. So take home pay was almost $9,000. Like I said, that should go up to like 9,500 next couple months throughout the end of the year. So that will be nice to work off paying off our primary residence. But for my wife, she made 581. Again, she's just adjunct teaching right now, so paid $83 in taxes and took home about $500. Rental properties. So we currently have 2 rental properties. We purchased these about 5 years ago. We purchased one in 2020 and then purchased the second one in September of 2020. Both of those have been rented since 2020. And we actually just got the first turnover ever since 5 years ago. So the second property that we bought, the tenants lived there for 5 years. They will be moving out in September. And so we will actually, I'll go in and clean everything up, probably put new carpets in there. It needs a new shower and a new bathtub. So I'll do some of that work in September, probably take me a week. I'll hire some of the stuff out and then do some painting and maybe flooring myself. So we'll get that released in September, and it's actually a blessing in disguise for us. It's a 3 bedroom, 1 bathroom in our area with a fenced-in backyard. A fairly nice house, not horrible, but not, super nice either. So it's a good rental property. We had this rented at $11.75 a month, and right now in my area, just just for context, the average 3 bedroom is $2,300 a month, and we were rented at $11.75. So significantly, almost half rented compared to what it probably should be. So we will most likely move this up to 1,500, maybe $1,600 a month uh, come September. So that will be another good source of income coming in, kind of like getting a pay raise for somebody moving out. So the tenant has been fantastic as well. So they've taken fantastic care of the property and have really not damaged too much at all. So some of those clickbait things that you see on the internet where the tenant destroys the house. Honestly, from my experience, if you just screen the tenant appropriately and do your background checks, do your due diligence, you tend to not get into those issues. So this income should probably bump up to 2750 come September, and then in December, our first rental property will bump the rent up a little bit on there as well. It's a 4 bedroom, and that one's rented at 1350, and 4 bedrooms in my area are about 3,000 a month. So we need to bump that one up to at least 1,500 or 1,600 as well for that. And same thing, if the tenant moves out of that house, then we will probably bump it up to 1,800, I would say, for a 4 bedroom. But right now, I'm fine being under rented as long as the tenants stay and they're taking good care of the house. So in terms of other income, I mentioned in July of last year, I got my real estate license. So I'm still working in pharmaceuticals, which is the main job. So thankfully, I'm able to do that remotely. So that's where most of my income comes in, and that's where I've worked for the past 13 years. So I'll continue doing that since it's such a good paying industry and a good paying job. Um, on the side, I am doing being a real estate agent, so doing nights and weekends, doing that. So this year, I've made about 14-ish thousand from being a real estate agent. So this is what this extra income is. I did sell one property at the end of July, and my commission split on that was 3,325. So that's just direct take home, what I made from that sale. So other than that, gross income for the month was $20,428, and then take home pay was about $15,000. And so you can see all of my yearly totals down here, and then all of my lifetime totals just below that. So feel free to pause the video if you are interested in those as well. Before I move forward, the only other thing to really discuss here is taxes. And so taxes, last year I got hit pretty hard in terms of taxes. I hired a CPA. What I'm realizing is as your income approaches that $200,000 mark, that $250,000 mark, then you factor in rentals into this. You factor in other sources of income for like real estate agent stuff and investment income. Typically your CPAs stop getting, I will say, as knowledgeable as what somebody else might be able to be. I know last year I fell into a circumstance of where they asked me the question, am I a full-time real estate professional? And my CPA advised me to answer no to that. I did some research, I made some phone calls. Honestly, there was nobody else at the time I knew that I could call. I even called um, the tax agency that does your taxes and tried to get some advice from them, which they wouldn't give me advice on my personal tax situation, of course. So essentially, I answered the question no, and I ended up paying about $14,000 more in taxes because I answered that question no. So I had it on my list for this year to try to get better control of that. And part of that was me meeting with what's called an enrolled agent, so an EA. And so an enrolled agent is somebody that is more knowledgeable about like nuanced tax code than what a CPA would be. And so I spent maybe 150 this month and met with that enrolled agent, kind of went over my game plan for the year and where I'd end up with some of my businesses. They did instruct me that I answered that incorrectly last year, and so that 14,000 extra that I paid in taxes, I actually should be answering that yes, because I have my real estate license, and because we're doing rental properties as well. So that basically, I'm going to get a little technical here, but because my gross or my modified adjusted gross income is over 150,000 for the year, like you can see last year it was way over 150,000. I basically can't write any losses off from my LLCs, my rental property LLC or my realtor LLC. And so if you say yes, you are a full-time real estate professional, then you can write off unlimited losses. It turns passive income from your real estate into active income from your W-2. And so essentially I can show losses from being a real estate agent and from owning rental properties and then write those losses off against my W-2 income that I make in pharmaceuticals. Um, I'll put a caveat in there. I am not a tax professional, and so I've never worked in taxes, so feel free. If you happen to be in this situation, I would highly advise you contact a CPA or preferably an enrolled agent and get your specific situation run by them. And for me, like I will probably get a return of 20 to 25,000, I would assume this year, and all of that for just a couple $100 to meet with an enrolled agent was definitely worth it. So if you fall into that situation, that may be something for you to look into. But we'll go ahead and jump forward into the net worth update. So really no changes in terms of property. I am working on, not working, I would say I'm maybe going to inherit a trailer. I'm not quite sure. It'll be a dual axle trailer, so maybe next month this will go up $2,000, but in the grand scheme of things, really not much changes. These four properties did go up 2% in value per year, or it's, whatever that would be, 0.2% per month or whatever. I will say in my area, in terms of real estate, I am noticing a lot of changes in the market. I'm seeing a lot of houses being price dropped, not a lot of buyers. Interest rates are still around 6.75% if you don't do any points. And so, yeah, I'm seeing a lot of pretty good deals come up, honestly. And I mentioned previously my threshold for real estate, I think it's in this tab, is a 15% cash on cash return. And so like here was that second house that I bought as a rental. This is not the actual house, but this was in a past video. So 15% was my threshold. I am seeing a lot of stuff now that's like 12, 13%, which is, I've not seen that in, 4 years, 5 years. And so we are getting pretty close to that 15% number. And I may end up making a video as well. There are some ways that you can, maybe you find a house that's 12% cash on cash return. If you are pretty savvy with financing, you can honestly push a 12% cash on cash return up into 15, 16% cash on cash return. If you know what you're doing with points and then what you're doing with the utilities and what you're doing, maybe you have your real estate license. Yeah, you can easily get that from 12 to probably 15%. So you can, just by financing everything appropriately, probably get 3% more rate of return. So, but I am seeing a lot of houses come up right now. So unfortunately, I got to pay off house number 8, so not really in the buying mode right now. But if there's something that's really, really good out there, I'll probably pause and then make that purchase and then regroup for a couple months. But that's kind of what's going on in terms of real estate. In terms of investments, honestly, it's been a fantastic month. I just updated this yesterday on July 31st. I am seeing today it's down a little bit, but it goes up, it goes down. Last month I was up about 20,000, it looks like. So HSA is at 84,000. 401k is at 333,000, and then my wife's 403b is at 293. So we're sitting at 711,000, which if you look at the start of the year, this was December 31st. We're up almost 100,000 in 6 months roughly. So really, I mean, not bad. I did time this I wouldn't say crash, but the little dip in April pretty well. I am roughly probably 60% invested and probably 40% in either like very heavy value stocks or just plain money markets. So I am not personally invested at the moment, but. So 711,000 in investments. In terms of debt, we just made minimum payments on these three. These are the two rental properties. These are at 3.25 and 3.375% interest. This is 66 acres, which is land number 8. So we owe 177 on that. That is 15-year fixed at 3.7% interest. So again, just making minimum payments on these since they're all under 4% interest. And then house number 8, we've had a good journey on this one. This is our primary residence that sits on the 66 acres. Total house cost was like around 700,000. And so we have paid off about $400,000 in 2 years. It's been 2 years since we've lived here now. So also made really good progress this month as well. So we ended up saving probably 3,000 in terms of cash just after from W-2 income, and then from making the $3,200 from being a real estate agent as well. That was another couple $1,000s there as well. So probably 3,000. So overall, we made a payment of 3,000, or sorry, $6,000 towards house number 8. So pretty good month there. So we're down to 311,781, and then total debt is down to 661,000, which may seem pretty high, but again, these are all long-term rental properties, and this is all real estate, honestly. So we do not have any other personal debt, no credit cards, no student loans, no car payments, nothing like that. So cash, like I mentioned, we saved $6,000. I took that 6,000, I put it towards house number 8. So this is at what we basically keep our cash at, $40,000, which is probably 6 to 9 months worth of expenses for us, somewhere in there. So we just keep that at 40,000, and then rental checkings account. This is at 31,859. So we did gain about 600 there. Through the end of the year, this may dwindle down just a little bit. So it will probably, we need to purchase, like I need to purchase a snowblower, and honestly, I need to make some purchases to reduce my tax exposure. I would rather, there's some things that I need, like let's say a snowblower, things like that, where I'd rather spend that from the rental checkings account versus pay the taxes on there. So the other thing as well is when house number 7, when the tenant moves out of there, we will have to do some remodels, like I said, for the floors, maybe paint a little bit, and then do some shower work. So that I'm guessing that will be between 5 and 10,000. So we will take that out of the rental checkings account too, and that will kind of justify us increasing the rent quite a bit. So I would expect rental checkings to go down over the next couple months. But essentially, to end off July here, we are at $1,860,178. And our goal of having $4 million by 40 years old, we are $620,000 ahead of that. So net worth basically jumped up, I think it was $30,615 compared to last month. So honestly, I mean, really good. So since December, I mean, we have increased our net worth 235,000, and so we're kind of on pace to hit 400,000 for the year. Honestly, if things just go in the way that they're going, we may cross that $1 million mark. That would put us at like a million, or sorry, 2,025,000 roughly. So we'll see what the next 4 or 5 months brings. I do have some other real estate deals that are kind of in the works. I've got a couple tricks up my sleeve in terms of paying off house number 8 that I'll probably execute if the time is right. So a lot of things in store, and looking forward to crossing that multi-million-dollar mark. But things are going good. So yeah, thank you all for tuning into the video. If you liked it, be sure to click the like button, comment, subscribe down below. I When you all do comment down below, I do read all of those. I do respond to all of those, and I specifically enjoy reading the comments and answering questions. So if you have any feedback, feel free to place it down there below, and we will catch you all in the next video.